Okay, good morning everyone and welcome to this third in our series of live revision blasts for AQA A-Level Business. And joining me this morning, live from County Durham, is Graham. So a big hi to Graham in the chat window, everyone. Whilst
Hello,
Graham
everyone.
just says something to make sure he's there. How are you doing, mate?
I'm very good. Are you all right?
Yeah, good. Graham, do you want to give us a flavour for what we're going to cover today, how it works? I think you're starting off, and I'll finish off the session, and then when you're ready, we'll flick the switch and start the activities.
Jackpot. Okay, so welcome everyone on this lovely half term. Similar to last week, there are 10 MCQ questions, and there'll be a question, 4 possible answers, A, B, C, and D. It would be really good if you could type your answers into the chat window. So if you think the answer is A, type A, so on and so forth. We are going to start with a short activity called the Big Reveal, and then we're going to end with a really cool activity. I don't want to spoil it because Jim's going to present it. But I think there's a couple of calculations, so you will need a calculating implement, smartphone, calculator, that type of thing. So shall we get started, everyone? Shall we get started? Let's get started. So the first activity we're going to do is called the Big Reveal. Now, I'm going to give you 5 clues, and you have to name the product the clue relates to. You can have a go now. If you think you know what product it is from what you can see on screen, please type in your answer into the chat window. If not, let's go to clue number 1. Can we reveal clue number 1, please, Jim? So, clue number 1, research and development for this product began in 1990. So, it doesn't say it was launched in 1990, but this is when the research and development for this product began. So R&D for this product began in 1990. Not a lot to go on there. Let's reveal clue number 2. So only 200 units of the first version of this product were ever manufactured. Any ideas? So research and development began in 1990. Only 200 units of the first version of this product were ever manufactured. Tough. It's quite a tough one today. Let's have a look at clue number 3. So, by the end of 2003, 100 million units had been sold globally. So, 100 million units had been sold globally by the end of 2003. Any ideas what this product is? It's a classic. It's a classic product. It's not baked beans. It's not baked beans. That's the benefit of hindsight. Let's have a look at clue number 4. Oh, iPhone. Oh, no, it's not the iPhone, but thanks for having a go, Will. Clue number 4. You know what? I did have one of these products as growing up. I did have one. The advertising slogan for the current version of the product is "Play has no limits." I think we've got a right answer. I think someone has got, there's some right answers coming through. Question 5, clue number 5 even. The best-selling accessory for this product is a DualSense wireless controller, and it is indeed the PlayStation. I've got many happy memories of playing Crash Bandicoot and Tomb Raider. Happy days. PlayStation. Fantastic. We know our games consoles. Fantastic. Shall we start the MCQs? So, 2 statements here. You need to read both and decide whether statement 1 is true or false and whether statement 2 is true or false, and select A, B, C, or D. For example, if you believe statement 1 is true and statement 2 is true, select A, so on and so forth. So, Kaplan and Norton's balanced scorecard encourages managers to use both financial and non-financial information to assess business performance. Statement 2, Elkington's triple bottom line model provides a framework for businesses to measure performance based on profit, planet, and productivity. So, a few seconds on that, 30 seconds maybe. Have a read of those statements and decide whether you think statement 1 is true or false, and whether statement 2 is true or false, and select A, B, C, or D. What do we think? You have a bonus point if you know Elkington's first name as well. Do we know Elkington's first name? So lots of correct answers coming through. Lots of correct answers. If anyone knows Elkington's first name, then please type it in the chat window. It is John. It is John. John Elkington. Fantastic. Well done. It is John. Shall we reveal the answer? The answer is B. Statement 1 is true. Statement 2 is false. Before we move on to the next question, Elkington's triple bottom line is people, planet and profit. And it was actually, I believe, a 25-mark essay question in 2017 where students were asked to discuss the extent to which businesses are likely to have lower profits as a result of using the triple bottom line. So there was lots of arguments there, maybe about focusing on planet and people, benefiting stakeholders such as employees in the local community, which could lead to higher costs. Some balance there, maybe employees were recognised, could be more productive, which could result in lower labour costs per unit, leading to lower unit costs and greater profit. And if memory serves me right, Morrison's, I think, were the first supermarket to pay at least £10 an hour. So that's one example of a business really focusing on people. So on the one hand, that's no doubt going to increase their labour costs, but that could perhaps lead to lower labour turnover, which could lead to a greater reduction in costs. So you can just see how you can get some balance from Elkington's triple bottom line. Okay, shall we move on to question 2? So question 2 here, figure A shows how 4 products in a market are positioned based on 2 dimensions, product quality and price. So we can see our axes there, high price, low quality, inferior, high quality, superior. Which product is most likely to have a negative income elasticity of demand? Is it A, product A? Is it B, product B? C, product C? Is it D, product D? So a few seconds on that. So this is a challenging question because you need to interpret the data you can see on screen there and decide which of those is most likely to have a negative income elasticity of demand coefficient. So it's good to see some answers, some really good answers coming through. And I can certainly see the answer on screen. Yes, I can see the answer. So lots of answers coming through. A few more seconds for the people to type their responses in the chat window. What do we think? Is it A, B, C, or D? Okay, so I think most people are putting C. Shall we see what it is? And it is C. So, you know, as incomes rise, people are more likely to move away from product C and buy potentially D, A, and B, or A, B, and D. Now, income elasticity of a negative income elasticity of demand coefficient. This is really important. Means as incomes rise, the quantity demanded will fall. And this was again examined in 2017, and loads of students showed a real lack of accurate knowledge and understanding in relation to a negative income elasticity of demand coefficient. And I think it was down to that in relation to PED, you ignore the minus, but you don't ignore the minus in terms of income elasticity. So if you see a minus in front of an income elasticity of demand coefficient, it means it's got a negative income elasticity of demand. So don't get the two confused. That is really, really important, because if you start talking about the wrong concept, then you know that's going to really limit your marks in your assessments. Okay, question 3. A nice straightforward one here. Which combination of changes to operational performance would be most likely to lead to an increase in unit costs for a business? Is it A, lower labour productivity and lower capacity utilisation? Is it B, lower labour productivity and higher capacity utilisation? Is it C, higher labour productivity and lower capacity utilisation? Or is it D, higher labour productivity and higher capacity utilisation? What do we think? Is it A? Is it B? Is it C or D? So changes in operational performance would most likely lead to an increase in unit costs for a business. So again, lots of answers coming through, lots of correct answers, which is great to see. Shall we reveal the answer? Okay, so let's just pull that apart a bit for those who maybe are unsure or didn't type their answer in the chat window. Lower labour productivity would lead to higher labour costs per unit, subsequently leading to higher unit costs. Lower capacity utilization means fixed costs are spread out over fewer units of output. Again, both of those together would lead to an increase in unit costs for a business. Superb. Well done, everyone. Let's look at question 4. So according to Hertzberg, in terms of motivating employees, which aspect of human resource management would be classed as a hygiene factor? So this relates to Hertzberg's 2-factor theory, hygiene factors and motivators. Is it A, recognition, B, achievement, C, working conditions, D, empowerment? Which of those is a hygiene factor? Now, remember, Hertzberg says that, hygiene factors don't motivate, they just prevent dissatisfaction. And there's a big misconception sometimes when I'm reading students' answers that they don't believe hygiene factors are important. They are just as important as motivators because they reduce dissatisfaction, and therefore you need the motivators to motivate employees. So don't dismiss hygiene factors. They are absolutely crucial. So shall we reveal the answer to this? Working conditions. Can anyone in the chat window please type in another example of a hygiene factor? So if you could do that, type in another example of a hygiene factor. So we've got some motivators on screen. What is an example of a hygiene factor? I'll give you a couple of seconds to do that. Maybe if you could type 1 in or 2 in. So we've got one there. Louisa said pay. So yes, pay is a hygiene factor. According to Hertzberg, paying people more money will just simply limit or reduce dissatisfaction rather than actually motivate. Now, safety, they're really related to Maslow's theory. So try not to get the two confused. Supervision is another one. So how you are managed, how you are supervised at work. So just be really careful and specific in relation to your motivational theory. So you don't want to get them too confused. Okay, because there's lots of answers coming relating to Maslow as opposed to Hertzberg. Okay, then. Last question from me, question 5. So the table shows a summary of features relating to 2 aspects of the marketing mix for 4 products. Which product is most likely to be a specialty product? Is it product A? Is it product B? Is it product C or product D? So you've got price, low, low, high, high, and you've got place, wide, limited, wide, limited. So using the information in that matrix there, can you decide which product is most likely to be a specialty product? What do we think? Okay, great to see loads of answers coming in. Now, let's reveal the answer, please. It is product D. Now, before we move on, can you give me an example? So maybe a real example of a product that you could sort of associate with product D, or a type of product. So a specialty product would have a high price and limited distribution. You can put examples in. Of course, you can always support your answer with relevant examples. That can build your application and get greater depth of analysis. Plus, the Gucci handbags, a really good product, really good answer there. So luxury products, for example, something like Moncler, designer brand, high price, limited distribution. I was talking to Jim yesterday about this. I live in a very rural area, and I was mentioning that, there's a massive tractor showroom where I live in County Durham, and the prices of tractors are extremely high, but you can only get them in a certain number of places, so distribution is limited. That's because it is a specialty product. So designer clothing, fantastic Dior, branded products, Rolex, Bentleys, you're really showing your application there. And of course, using relevant examples to support your answer can help build application and give you greater depth of analysis. The Tutor to You calculation booklets are written by an expert, available at all good bookshops and a few bad ones. So that is a really good example of a specialty product. Fantastic. So I'm going to hand you over to Jim now, who's going to take you through the remaining questions and the final activity. Thank you so much for everyone getting involved. Thank you so much.
Yeah, thanks, Graham. Excellent stuff. And looking at the chat window, I think most people are on sort of 4 out of 5 or 5 out of 5. So that's a fantastic start. I think the next 5 questions pretty challenging as well. I think the first 5
Very challenging.
were
Very
tough as well.
challenging.
So let's see how many points or how many marks we can get. Let's go back to the MCQs. And now this is a really challenging one, so take your time on this. Often when you're doing sort of paper 1 style MCQs, some of them you can get done in 10 seconds, 15 seconds, but there are some it's worth spending a minute or two on to get the mark. So the table there on the screen shows some financial information relating to a business in 2020. And there are 2 statements for you to decide whether they are true or false. Firstly, the business achieved a positive net cash inflow, positive net cash flow in 2020. And statement 2, the business achieved a favourable profit variance in 2020. So looking at the data there, can you work out whether each of those statements is either true or false? And then, as always, the options are always the same. Select from A, B, C and D the combination. So a little bit of calculation to be done. You might be able to do it in your head, but often find it's worth scribbling the numbers down. So look at the information carefully and then have a go. Often you'll get questions, or increasingly AQA set questions, that sort of do a combination of topics within the same question. So in this case we're looking at understanding net cash flow, cash flows, and also being able to interpret data in relation to variances, in this case a profit variance. But this is a very challenging question, so we'll have a look through the response. I'll give you another 5 or 10 seconds to complete your calculations and then stick the answer in the chat window if you wish. You don't have to. We've got a variety of answers coming through here. Fortunately, all of them are either A, B, C or D, but it looks like people have adopted some different approaches to doing the calculations. Let's give you a few more seconds, and I think we'll take a look at the answer, shall we? So if you said C, you would be correct. So well done if you said C, but don't worry if you didn't. Let's just go through these. Well, firstly, statement 1, the business achieved a positive cash flow. Well, don't forget, cash flow, net cash flow, is a difference between what you start with and what you end up with. So according to the table, we need to be looking at the actual column there. We started with £480,000, we ended up with £450,000. That is a £30,000 fall in cash balances, therefore a cash outflow, a negative cash flow in 2020. So statement 1 is false. The second part, we needed to work out the profit variance. Well, in 2020, looking at the budget column, the difference between revenues and costs was a budgeted profit of 250. When we look at the actual column, although revenues and costs were lower, the actual profit was 260. So there is a 10,000 favourable profit variance in 2020. That's the difference between the actual profit of 260 and the budgeted profit of 250. So hopefully that's what you did on that one. Well done if you got that right. Don't worry if you didn't. That was a really complicated question, a challenging, discriminating question. So let's have a look at question 7. And here we've got some statements for you to look at that are connected to the concept of margin of safety, which is part of break-even analysis. So which of these statements about break-even analysis is true? One of these is true, the others are therefore false. Is it A, an increase in contribution per unit will decrease the margin of safety? Is it B, a decrease in fixed costs will increase the margin of safety? C, a lower selling price per unit will increase the margin of safety? Or D, the margin of safety is calculated as the difference between budgeted output and actual output. So have a think about those 4 statements. Just one of them is true. Which one is it? A few more seconds. This really does test understanding of not only what margin of safety is, but what can influence the margin of safety. So we'll spend a minute just going through it. A few more seconds. Okay, it looks like most people, in fact we've had a couple of changes there, changes from one answer to another, which is good. Always cross out the one you don't want and replace it with the one you do. The answer is B, so well done if you put B. Looking at the chat window, lots of people went for B. Let's just go through why that is. Well, firstly, the margin of safety is the difference between the actual output and the break-even output. So that immediately eliminates answer D. It's nothing to do with the budget. It's the difference between the actual output and the break-even output. And the margin of safety is a concept of really saying to what extent are you safe from making a loss. If you're operating at an output that is higher than the break-even output, you're making a profit, and therefore the margin of safety is positive, and that's good news. So for example, let's say you're operating at 1,000 units per week, and the break-even output is 500 units per week. You have a margin of safety of 500. You could afford for output to fall by 500 units before you are in danger of making a loss. Therefore, answer A is incorrect, isn't it? Because an increase in contribution per unit, that will reduce the break-even output. That will be good news. That will therefore increase the margin of safety. And C is also wrong. A lower selling price per unit will increase the margin of safety. No, a lower selling price per unit will reduce, so will increase the break-even output. We'll have to sell more. Therefore, it will actually decrease the margin of safety. B is correct. If you reduce your fixed costs, that means you don't need to sell as many, and therefore your margin of safety increases. Tough question, but a challenging one on break-even. Let's move on to question 8. This one is on decision trees, but we're not asking you to complete or interpret a decision tree. It's more about the concept behind the decision-making tool. So it's a 2-statement question. Statement 1, the probabilities of the given outcomes in a decision tree should add up to 1. And statement 2, the expected values of all given outcomes in a decision tree must be positive. So looking at those 2 statements, based on your understanding of decision trees, what do you think the right combination of answers is? And then when you're ready, type your answer into the chat window, and again we'll go through these. This is another challenging question that tests understanding of decision trees. Luke is first into the chat window. He's going for B, but we've got some other answers coming through. But it looks like most people, having perhaps reread some of those statements, are now going for B. A few more seconds. Shall we take a look? How do you get on? Well, the answer is actually, it is B. So well done if you put B. And don't worry if you didn't put it in the chat window. The main thing is to have a go at these questions. Decision trees takes you back all the way to year 1. Don't forget the decision tree sets out some choices a business can consider. And for each choice there are some potential outcomes. Nearly every decision tree you'll ever see, certainly at AQA, has typically 2 outcomes for each choice, and each of those outcomes has a probability of it happening. And yes, indeed, therefore the probabilities, all of those potential outcomes for each choice need to add up to 1, otherwise you're missing out on some of the possibilities, aren't you? So statement 1 is true. However, statement 2 is false, because the expected values don't have to be positive. It's possible that one of the outcomes for a choice could be negative. So for example, you could have a choice that is, do you launch a new product? And one of the outcomes is, yes you do, and let's say it has a probability of 80%, 0.8, and it has a profit. However, the other outcome could be a loss. That would be a negative outcome, and therefore the expected value would also be negative when we apply a probability to it. So they can be negative. Well done for question 8. 2 more questions to go. And this is a really challenging question, perhaps the hardest question for today. So in question 9 here, there is a figure on the screen there. Hopefully you can see that. If you're watching on a smartphone, you might want to zoom into it. But if everybody else should be fine. Figure B there shows an inventory control chart. The business now decides to increase the buffer stock level by 50% from the position on that chart. If the maximum stock level remains unchanged, what will the new reorder quantity be? So you're given an existing position there, based around the stock or the inventory control chart, and then the business is going to make a change to that chart. They want to increase the buffer stock level by 50%. If the maximum stock level remains unchanged, what will the new reorder quantity be? So have a look at that, and then when you're ready, type your answer into the chat window. This is a challenging question, and it's easy to mix up the data on the chart. A few more seconds, quite a few answers coming through late on, which is good. That's a sign that you've just double checked your workings. Let's take a look at the answer. The answer is, it is C, 900 units. Let's just go through why that is. Well, firstly, buffer stock. That is the minimum stock level. That's the line, the minimum stock level on the chart there, and we can see, looking across to the y-axis, that originally the minimum stock level was 200 units, and we're told that they want to increase that by 50%. In other words, to go from 200 to 300 units. That's the new minimum stock level. And then the only thing we're told is that the maximum stock level will remain unchanged, which will be 1,200 units, 1,200 units. Therefore, the reorder quantity, which is the difference between the maximum stock level and the minimum stock level, is going to be 1,200 units less 300 units, which is 900 units. We weren't given any information about whether there is a change in lead time which influences the reorder level. We were just told that there was going to be an increase, a rise in that minimum stock level. Therefore, everything else remaining the same. The new reorder quantity is 900 units. Well done for having a go with that one. So how are we getting on? Is anyone on 8 or 9 out of 9? 7 out of 9 would be a fantastic score. 6 out of 9 is going to be above average. What do we think? Type into the chat window how you're fixed so far, ahead of what is a very challenging question 10. Is anyone brave enough to say they're on 9 out of 9 so far? Obviously not. Oh, Hannah's on 8 out of 9. That is a superb score. Let's have a look, Hannah and everybody else, at the final question. Question 10. An investment project with an initial cost of £2 million had an expected payback period of 2.5 years and a net present value of £500,000. A reassessment of the project suggests the initial investment will be higher than expected by £300,000, but the project returns will stay the same. What will the consequence of that reassessment be for the investment appraisal data? So A, shorter payback period and a lower net present value? Is it B, a shorter payback period, a higher net present value? Is it C, a longer payback period and a higher net present value? Or D, a longer payback period and a lower net present value? And quite a few people are on a very high score as we're coming into this last question. But again, this tests understanding of investment appraisal rather than a specific calculation. So think it through, and then when you're ready, stick the answer into the chat window. So the initial investment or the initial cost is going to be higher, but the project returns, the net inflows are going to stay the same. So what does that mean for those two methods of investment appraisal? A few more seconds. I think we're just about there. A little bit of a mix of responses, but let's have a look. Well, the answer is, it is D. So it's a longer payback period. It's going to take longer to pay back the initial investment. Why is that? Well, because the initial investment is going to be higher by 300,000, so it's going to be 2.3 million rather than 2 million. Therefore, it will take us longer because we're told the returns are going to be the same. So the payback period will be longer, not a lot longer probably, but still longer. And in terms of the net present value, well, the discounted cash flows coming in will be the same. However, the initial investment is going to be higher, and therefore the net present value is going to be lower. We have to invest more to get the same returns. So therefore the net present value will be lower. So the answer was D. So well done on those. I think of the three MCQ revision blasts we've done so far, I would say, I don't know whether Graham agrees with me on this, that those are the most challenging questions we've had so far. Tough ones. So let's finish off with a little activity here, which I think we had a prize activity last week that was won after about 10 seconds. Let's see how you get on with this one. It's called Kim's Game. I don't know whether you know this, but when we're not doing A-Level Business, Graham and I work for MI5 and MA6 and probably MI7 as trainee spies. Kim's Game is an activity that was originally done to identify and then train spies. So we're going to have a go at that, but this time with A-Level Business. I'm about to show you 9 items on the screen, and what you need to do is to memorize them. That's all you need to do. And they'll start to disappear every 6 seconds. By the way, spies aren't allowed to write these down. Or take a screenshot on your phone. Well done, that's it. We're finished. So thanks very much for joining us today on today's AQA Revision Blast. I hope hopefully you found the questions useful. We won't go over all 10 of them again. Oh, hang on. Wait a minute. Sorry, I forgot. Trainee spies in the building. I wanted you to memorize those 9 items that I showed you a few seconds ago. So hopefully you did. So please can you tell me, based on what you saw, which 2 are missing? Type them into the chat window. Of the 9 theories and models that we listed and that you memorized, 2 have been taken away. Which 2 are missing from that list? What do you think? I'm looking for the first person to get the 2 that are missing. 1 or 2 people saying SWOT analysis, but I can see SWOT analysis on the screen there, so I don't think it's missing. And we have a winner. We have a winner, and today it is Hannah. Hannah spotted correctly that it's Hackman and Oldham and the product life cycle that we're missing from the board. So well done for picking it up. Good memory and good performance on the MCQs as well. Superb. Well, the bad news is that's the end of the session. I don't know how you're feeling about that, Graham, but the answers there were fantastic, weren't they?
Yeah, they were amazing. You just reminded me there. I've got a book out in the library on improving my memory, and I keep forgetting to take it back. The answers were absolutely superb, and they were really, really challenging questions. So you've done so well. Great response, great interaction. Shall we do this again next Friday, Jim? Shall we do it again?
Why not?
I think we should. We'll be here next Friday, 11 o'clock. Any topics, you've got a few seconds now that you maybe want us to cover, please type them in the chat window. That would be great. Thank you for getting involved. Superb answers. Really, really well done. So we will be back again next Friday, 11 o'clock.
Yeah, I was just going to say, Graham, don't forget, if you did enjoy the session, you found it useful,
yes,
give it that thumbs up so that Graham gets a bonus. He's paid, well, it's nothing per thumbs up, so as many thumbs up as possible would be great. Yeah. And also, if you want to get an alert to when we schedule the next sessions, not just for AQA A-Level Business, which is this session is designed for AQA, but also we're running a weekly A-Level Business revision blast across all the topics, across the exam boards, which I think you might also find useful.
Yeah, this Tuesday. So Tuesday at 3 o'clock, we are doing quantitative skills and numerical concepts. So you'd be more than welcome to join us. So I think on behalf of Jim and I, thank you so much for getting involved, and we will see you next week.
Yeah,
bye, everyone.
Thank you.